Good evening to all of you. Welcome you to today's webinar. Today we are going to have a discussion on pivot point trading. Now when we say about pivot point trading, normally there are two ways of using pivot points for trading. One is of course the traditional pivot point. What we call is a traditional pivot point, which as a trader you would have been first introduced to a sort of formula. That is the average rate. You look at it, then you calculate S1, S2, S3 and all. Similarly R1, R2, R3, right? So this is one way of calculation, and this is called what we call as a traditional pivot point. So this is normally the day traders use traditional pivot point for trend identification and also areas where you can go for a buy or sell. Now today itself is one example. We'll just look at it before we go to the type of pivot point which we are going to explain, and how to use the pivot points which we are talking about for support and resistance, and also we are going to talk about a little bit about market psychology. Now let us say yesterday's value. Now this is yesterday's value in Nifty, 17,599. High was 17,599. Low and close low was 16,997, 17,149. Right. Now this is the based on this I low close. You are familiar. That is the average rate, or the PP, which they call pivot point, is by I plus low plus close divided by 3, and this is 17,599 plus 16,997 plus 17,149. It comes to 17,248. Okay, 17,248. S1 is 16,895, 897. So today let us look at the range. Today it just went below the S1. Went up to 16,835, 836, and for most of the time it was trading between this, right? So only towards the close today we saw the 17,248 being taken off. So because yesterday's range was very huge, yesterday's range itself was almost 600 points, like high to low, and because of that we got a PP and S1 like this, and it's almost a non-tradable thing. That is 17,248. If you say if it goes above 17,248 you buy, and keeping 16,897 as a stop loss, it's a very difficult call. So probably on these days of such a extreme volatility, probably we may have to avoid trading itself, right? So this is what is called the traditional pivot point. Now from this we will calculate the R1, R2, all those things. And yesterday also, if you see the range was quite big. It broke. The previous day had a slightly decent range, and once that was broken, we saw a big fall, and that broke all S2, S3, S4, almost all type of supports were broken yesterday. So to that extent, the market has been extremely volatile, and to use the traditional pivot point also is not that easy, in such volatile cases. So probably we have to look at days like this, and extreme volatile days like this, and probably even avoid trading. So that's one way of looking at it. That is, if the difference between PP and S1 or PP and R1 is huge, more than say 70-80 points or so, then in that case it is better to avoid trading, because you cannot keep a stop loss in a day trading of 70-80 points. Okay, so you have to keep it something like 35-40 points in an intraday. Okay, so if keeping it around 80-90 points, probably know that and if you're closing it in the same day, it means the amount of profits that you learn on certain days is going to be less, and the amount of loss that you're going to make on certain days will be more, and because of that you will never make money. So that is one thing that you have to look at it, whether it is feasible to trade like that. Okay, though those are good points to identify that what is the likely range for the day. Now today we saw most of the time it can be between 17,250 and 16,900. That's how our initial calculation. It just worked out to a very large extent. See, if you look at the when it went up to 17,198, and of course the close was good enough, 17,308. It went up to 308 and it broke the 17,248 level also. So to some extent we can see, we can say that probably the trend today is been that the S1 held, which means probably in a downfall market, if S1 holds, then it's a good sign, okay, because then it should normally it can go to S2 and other things. So today the S1 held, so that's a decent sign that the market has stabilized, but it is not giving us a very important tradable area today. So in these type of volatile days, we have to look at alternatives. So one is that we must understand what the traditional pivot point is. At the same time, what are the pivot points of ILO, that is ILO pivot points, because ILO pivot point are also very, very important. Now probably we have already had webinars on this. So high pivot point and low pivot point. Now high pivot point is a place where demand comes because the market falls from that. Let us say it goes up like this and then one day it falls like this. So this is a high pivot point. That means this I is greater than the previous day high and is also greater than the succeeding day high. If that be the case, you call this as a high pivot point because that is where the demand has come. Right? Demand has come because the high pivot point represents a place where the demand has come. Now let us say this market was like this. This particular day you have a low which is lower than the previous day low and higher than the next succeeding day low. If that be the case, then this is a low pivot point, LPP, which is a supply point, which is the this is the demand point because here the market has gone up and this is the supply place because here the market has started to come down, right? So it has started to come down. So that is a supply point and here it has started to go up. So the low pivot point is a place where you get a demand. So that is called the demand point. So the demand and supply areas are generally used very well by traders. So what they do is that on any break of this place, on any break of this particular place, generally the market is considered to be bearish, and any break above this previous demand point, which is also the high pivot point, any break above the previous supply point, which is also the high pivot point, generally is considered to be bullish. So this is how generally the Dow theory works. This higher high, higher lows is what we have seen as an uptrend. Lower lows, lower bottoms, lower tops we know as a bearish market, and in between normally is a sideways market. So in this case, the if you identify these places either on a daily chart or on a weekly chart, monthly chart, or in an intraday time frame, then it can be extremely helpful for you to fine-tune your trading and also to make profit. So before we go to the charts, what is we wish to highlight certain things. That is, now we know that there is all the high pivot points, the supply points, they are considered called as resistance zones, right? So there is a resistance. That is why the price falls. So let us say it goes to 17,600 and from 17,600 it falls. So the 17,600 high, wherever it is made, it is called as a resistance place, right? So it is called a resistance zone. Now similarly, low pivot point. So today, let us say today's low is intact, it doesn't fall today, then 16,850 today will be called as a low pivot point, and that is called as a support place, right? Support. So what generally happens once a support is broken, we know that it becomes a resistance zone. So similarly, when a resistance is broken, that becomes a support place. So this is how the trading generally, the traders look at resistance support zones to do, because there are multiple ways of trading using indicators. The easiest thing is to use a moving average indicator, but that has to be used innovatively rather than just only looking at the break of all the important moving averages. Moving average crossovers are used by some. Then some people use non-trending things. So there are different ways of identifying a trend and to get on board at a particular point. Okay, and this pivot points is also one, but only advantage come from a pivot point compared to the other moving averages. Other moving averages are generally a bit of laggard. laggard in the sense market trend would have developed a little bit or considerably before you get into buy or sell, because a lot of people generally will complain that I didn't get something very close to the bottom. Similarly, a lot of others will complain that I didn't get a place where to sell exactly at the top, near the top. Okay, so to some extent the pivot points help you to identify the places where probably you can get in or get out much easier. So that also depends on whether we are using a daily time frame, weekly time frame, monthly time frame, or intraday time frame. So it depends on what type of trader you are and what type of stop losses you choose to elect, because that is also very important. Because small stop losses, if you want, then you should go for an intraday time frame, which could be probably hour, 15 minutes, like that. And if you feel that you are an investor and you don't need to really look at all those things, then monthly, weekly, all those things will be important. Okay, so we will look at all time frames, okay, and then illustrate, and also look at Nifty, Bank Nifty, a little bit on stocks or even commodities. So we will have today one discussion, then we will look at the illustration further sometime next week or coming weeks also. So I've identified that pivot points or the high pivot. So there are two types of pivot points. One is a traditional pivot point calculated using the formulas. Then we have got a pivot point identified using demand supply points, which are the resistance support zones. So that is another pivot point. Now the third thing is in the pivot points also, when they use like the high pivot point and low pivot point, normally what they will use is the pivot point in a shorter time frame. Generally they will use 5, that is this I which I told you. Now this high, now this immediately I'm saying this is high because the succeeding and previous bars or lower highs. But in the case of some traders, they want at least this high to be preceded by 5 lower highs and 5 lower tops, 5 lower succeeding 5 lower tops. So then only they will take this as a pivot point, because they want good strength of that pivot point. Single one pivot point, generally they consider as not good. Okay, they don't consider that, they consider as a weak pivot point. Okay, a strong pivot point, generally they use 2 or 3 or 5, up to 5 also they use, and if it is intraday time frame they even use 10 or 15. So traditional the normal pivot points of high low, they use either, you can use from 1 to 15 they go, that is in a shorter time frame they may even go up to 15 pivot points. Okay, and in a daily chart and weekly chart you can't afford to do that. Probably in a daily chart they may go for 2 in the sense 2 bars of lower tops on the left side and 2 lower tops on the right hand side, that is succeeding and preceding should have 2 lower tops, then it is called as a pivot point. Then similarly for the support pivot point also, they want at least 2 higher lows and 2 higher lows on either side, that is 2 higher lows on succeeding and 2 higher lows preceding. So they want that to be, then in that case it is called as a important pivot point. So the 2, 5, 10 all depends on each one's analysis of the market and how they look at the chart. So one has to look at the chart and the time frame and decide what sort of pivot point that you want, whether you want 1, 2, 5, 10 or 15. So that will depend on the time frame also. So pivot point is what we have defined as the as an important high with succeeding and preceding highs lower than that. Similarly, pivot low is succeeding and preceding lowers have got a higher lows. So if that be the case, then that particular low becomes a low pivot point, which is a support point. Now the support and resistance alternate, that is if support is broken, that itself can become resistance. If resistance is broken, that itself becomes a support. So using this philosophy, we are going to look at the charts and see in different time frames, in different asset classes, how this can be put to use and how profitable it is. So now we will look at the chart, and that is we will look at the bigger time frame first. So we will go to the daily chart in Nifty. So Nifty, if you look at it, if you now let's look at from this place. Okay, now as I told you, this is a pivot low. This is a pivot low, correct? So this pivot low is because this is a here it's a bottom. Succeeding bottoms are higher, preceding bottoms are higher. So this is a pivot low. Similarly, this is a pivot low, right? Similarly, this is a pivot top. This is a pivot top, right? So this is called as pivot top because two high tops before that or one top before that is lower than this particular top. Similarly, succeeding, we have got a few bars which are lower than the this particular top. So we will call this as a important top. So now we have said that once the support becomes resistance becomes a support if it is broken. Now let's look at this this particular thing. Now see, from here we will make an analysis of the daily chart. Now let us say this is a low. Okay, on a close basis, let us say this is the important low because this was one low on a close basis, and after that this is a low, right? And then you have a low here, right? So this is a smaller pivot point compared to this. So it depends on which one we want to use. So let us say we are using this. Now this place we are going to use. Okay, so now if you look at it, the Nifty started to rally from here to this place, right? Then it had a fall, and this it was resisted near this bottom. Okay, near this bottom. Now we told you that support becomes resistance, resistance becomes support, right? So once this was broken, this became a resistance zone. So if you see, the first resistance came quite closer to that, a little bit here and there will always be there. So this became a very important resistance because this support turned out to be resistance. So once this was broken, then it started to rally. Okay, this started to rally, and we never had any proper dip. We never had a proper dip till such time it went up to this place and started to go below this. So here in this particular case, either there will always be a little bit of discretion that we have to use. We can either use this place or we can use this place, because if you look at a bigger pivot point, once it fell here, it went up, it came down, and then it went up. So either we can use this or we can use this place itself. We can use this place itself. So now here when we use this place, okay, now let's say once it started to break this place. So, okay, if you see, there was a this was a place where there was a support. So once this particular support is being broken, see, there was some hesitation somewhere here, and once that was broken, then it started to rally significantly, right? So we didn't see any move which was below this particular low even till day. Now if you see this, so that means you could have gone long very closer to the bottom itself. So this was a bottom. There was only one bottom you missed. This bottom you missed. So we could have even gone long here itself, right? We could have gone long here itself, right? So by going long very close to the bottom itself, okay, you retain a big benefit of picking up a sizable portion of the trend. So once this was broken, you are long somewhere here itself, okay. So once we have seen that once this was broken, you went up to this. So then you can keep this low as a probably as a stop loss. You can keep this low as a stop loss. So similarly, after this big rally that took place, I think this was a top and this was a bottom. So on any close below this, so for example this particular day it was slightly higher close. So here once it started to close below this close, which this close was we had a so this close is a higher close, and then after this lower close. So this close was 18,257. So once you have a close which is below 18,257, is 18,113, you could have got out of that position. We could have got out of this position, right? Sorry. Okay, sorry. Okay, so we look at the weekly chart also. Now, same thing which we apply here. See this particular action. Now it went up to this place. Now once it starts to fall below this, see this is the high. Okay, so once if it starts to fall below this particular low, we could be out of the position. We can be out of the position, right? So we are able to get out of the position the earliest. Now again the long position came because once this this was a low, and this once it fell and then went up to this place, then once we are above this particular place, okay, then in that case we went long. Okay. So now we similarly here on an intraday basis, once it started to fall below this, see on this particular day, once it started to fall below this, we could have got out of the long position. So what's happening is you are almost either at break even or at a small loss. You are either at a break even or with a small loss. If there is a big trend like this, then you go along with the trend and make a maximum profit. So the entire objective is to cut down the loss and to run the profit in a significant manner, right? So for this is a very helpful chart, because here if you see we were on the long position, and after that when we on cutting this we were long, and once it started to break below this, we got out of the position. So it was almost like a nil loss. Now here again, once it started to fall and started to go above this particular high, we were on the long position, and once it started to come below this, okay, now below this place itself, we got out of the position. So almost very closely we are monitoring for removing the position, and which helps you to ride with a big trend. And if at all the trend is choppy, you can cut off this particular position very easily. So that is the advantage of trading with the pivot points of this particular nature rather than with the day pivots, because that will give you a very big range to trade. Now I've only talked about the daily chart. We will look at the time intraday time frame also. So before that, let's look at the monthly chart and then weekly chart. So monthly chart. Now this is as so this month. Now this month low, if you look at it, so this should be holding. So this is a very important pivot point, because monthly pivot points are going to be extremely strong, important points. Because if this is cut, then we will have a lot of pressure on the market, and then it can easily go down to this particular high, which is the 15,500 levels. It will easily go down up to 15,500 levels. So this is a very important place, and so we should have. This is a monthly pivot. Now this is also a monthly important low, which is 16,800 levels, and today the market almost took support closer to that particular place. So this is a very important place where we expect if things are okay, we should expect the trend to pick up from this level itself. So if things don't go wrong either in the budget or next few days, then we should be in a position to see some sort of a rally. Only cutting below this, I think we will turn into a risky zone. Okay. Now weekly chart. We'll look at the weekly chart. So okay, weekly chart. Now the general trend. Now see this is thing, and then I told you the support come resistance area. So once it started to break this is 18,210. So it broke this 18,210, and once it started to break 18,210. The next level, lower level is this, okay. So this is 17,639. So 17,639 became a stop loss. Now I told you the resistance comes support level. So right now, if there is going to be a rally, then 17,650 will offer a very important resistance, and that has to be broken for the trend to get established again. So what happened today, recovery that took place, probably can meet a resistance close to 17,650 even if things are going to be better. Okay, so 17,650 is going to be a very important zone of resistance to watch. And today if you see, this was the low where the support needed. 16,782 is this low, and we can see the support which took place at 18,000 around 16,840. Now if you for a weekly chart, generally it's a very much clean compared to daily charts. So if you look at the same thing which I told you, once this particular level was broken, this became a support come resistance zone, right? So 17,615. So 17,615. Okay, now once it started to break this, which is 16,782, and the week close was above this, it became a long position, and no, till now we have not broken that. So the support come resistance zone, particularly in a weekly chart, is a very important thing to monitor. So kindly keep that particular thing in mind while doing your trading aspects. Okay, so now we will look at the hourly chart and 5 minutes or 1 minute chart, all those things. Okay, now okay, let us say this is the hourly chart. So once as per the same thing, once this low is broken, now the market has to at least climb above that for it to go long, for it to look towards going long. It did not happen. Then once this low was broken, then this low means this close low. Okay, now close hour. So close hour, it was not broken. Okay, close hour was not broken. And here again it went up, and here this is the place, this is today's place, where for the first after the fall we have a close which is above this particular close. Okay, which is above this particular close. This close was 17,080 or so. So once it started to go above 17,080, then at least we were confident that probably the selling pressure is getting eased. So right now we are in the uptrend, and this was a spiking high, which is the 17,198. So for those who are trading with smaller stop losses, should now move the stop losses close to 17,198 in case if they are already long. Okay, 17,198 is one place where probably you should put in your this one for the long positions, right? So this is the way you normally look at the way of trading, and it is the bigger trend can easily get established. So in this particular case, let us see, once you have a rise from here, see this one, then this place held. Okay, so this place held. So here, see, once it started to break below this, then probably you can look towards getting out of the position. Okay, so it came to this place. Then again, if it starts to move above this, then you can go long. Okay, and keep this low as a stop loss. Keep this low as a stop loss. So it went up again. It closed up this, and once it started to fall, it had a big fall. So without with a gap, it came down. But once it started to move above this, then you can go for a long and keeping the other this place as a stop loss. So the one zone, one low below that can be kept as a stop loss. One low below that can be kept as a stop loss. So the same thing can be identified even in a 15 minutes time frame. Even in a 15 minutes time frame today, you can look at it. Once this low was broken, it went up. Okay, so now what we need to do is that we there's some mild this one is here, so we can keep this 17,230, 225, 230 itself as a stop loss in 15 minutes. So that way you can work your towards making this positions workable and with a good amount of profit. Because today in the 15-minute chart itself, if you have gone long above this particular low, which is 16,998 or 17,000, you would have got almost 275 points profit today itself. 275 points of profit without any issue. Without any issue, probably you could have easily got into the profit zone. Or even here, if you look at it, this particular place also you could have gone long. So these are minor points, but when you are doing an intraday trading, we need to keep in mind all those smaller time frames also, in which probably you would like to do the trading, because the resistance come support zones have to be broken. Resistance come support zones have to be broken before you go long in any this one, that is the in any asset for that matter. So I think right now in a shorter time frame of 15 minutes and 1 hour, Nifty looks good, and in a daily time frame, I think this has broken this low, right? So this was the last low which was broken. So I think this support can hold, which is 17,145. I think 17,145 is a low which is to be watched now. Okay, 17,145, and then this particular low which is 16,997, from where it today it rallied. So even the previous day's lows then become very important. If there is a close above, see for example, this day it fell, and so the resistance will come closer to this particular low itself, the previous day low itself. Now after this, whenever there is a rally, there will be a rally, there will be at 17,487. So all those places itself, you can keep in mind the areas of resistance, that is the previous days and the previous days before that also as an important area of resistance. Now this becomes a support. This can become a support right now because of the rally. Once it starts to fall below this, then can become a problem. So on a daily basis, we have a support which is this particular place, which is 17,145, and then we have got 16,997. So these are places which we should look at it. And next area of resistance can come today. It just altered closer to 17,360, 379 can become a resistance. Now it has gone above this, so 17,379 to 400 can become the next area of resistance. From there could be a possible dip that could come. So if there is a further rally, it can even go up to 17,600 levels, from where it fell heavily. So that is the place where we can see some heavy resistance that could come as far as Nifty is concerned. And then we have to see if it starts to break 17,600 again, then we should be into heading back to the 18,300 mark. Okay, so this is as far as the Nifty chart is concerned. Now we will look at the Bank Nifty chart. So today it's a very bullish candle, what they call as an engulfing candle, because we have got a white body which is engulfing the previous day itself. So that's a good sign. And normally, it could have gone right up to this. So this is a very important support, because once it is broken, it has not even come below that level. Now area of resistance could be this area. So now if it starts to break 38,015, okay, because 38,015 is the resistance zone here. So if it starts to break 38,015 or this particular level, then we should be looking at new highs being made. So right now on the weekly chart and resistance, so this is the place where there was some resistance. If you look at it, last couple of days it had some resistance. So this is also being broken. So which means Bank Nifty is also looking quite good. Bank Nifty is also looking quite good right now. So we can look at it. And also we have told you that the support come resistance zones, all those thing. So once this area of resistance was broken, then we can keep the next level as a place where we can get out of the as a stop loss. So once this was broken, this level is broken, we can keep this particular level as a stop loss. So that's what happened here. If you look at it, there was a fall from this place. So that now similarly, once this was here, this was a support. So now once if it breaks this particular level, which it has broken, so this is going to be a very important support. So now this level being broken, or even this level being broken, which is the yesterday's 2 days before low, which is 2 days before low. So this was broken, and once that was broken on the downside, it went up to this level. So now with this being broken, we should feel this particular level will hold, or probably this will become a stop loss. This will become a stop loss for it to go up. So right now, once one level is broken, you can keep the next level down as a stop loss. So that is one way of looking so trading. Otherwise, normally they keep that if it goes to the next level itself, this level itself. Now since it went up to this particular level, okay, now went up to the level, even this will be considered as a stop loss. So this will be considered as a stop loss. So today after this thing, 37,220 was considered as a stop loss. So let's look at the hourly chart of what happened there. So so this was the 37,225, 230. So once it started to move above that, then in that case it just picked up steam and went up by 500 rupees. It just went up by 500 rupees today. From this particular level, it has gone up very significantly up to 37,700 levels or so. So So now we will look at some other NSD Bank itself. We will look at the monthly chart. So monthly chart, this is a very important low. This is going to be a very important low, like Nifty. Now this particular low is going to be very important as far as Bank Nifty is concerned. So we are very sure that this is going to hold, okay, unless something drastically happens. Now weekly chart. So this week is going to be very important. Next week is budget, so I think we can't say anything about it. And right now, because it went above this particular high, okay. So we can keep this low. We can keep this low as a stop loss. We can keep that one low which is below that as a stop loss. And it looks as if this level can hold. So this level can hold. This level can hold. Then in that case, whatever happens the remaining 2 days of this week, if that high is broken, then we should keep this low as a stop loss and look towards on the long side of Bank Nifty. Okay. So now this is Bank Nifty is concerned, and we will look at some other chart. TCS or Nifty IT stocks. Nifty IT. So Nifty IT should probably be having a good support today, because this was the important low which should hold. So this low should hold, and so you should look towards going long and Nifty in case if this is not broken. So Nifty IT looks to be has come to very important support level, and if this is broken, then probably we should be looking towards probably a slightly more bearish situation. But the stop loss should have been here itself. Stop loss should have been here. Okay, the stop loss should have been for Nifty IT should have been at 36,835 itself. Okay, now on a weekly chart. Now we look at the daily chart. Okay, on a daily chart, yeah. So this came a little early. So 38,206. So I think we should have been out of this one at 38,206. So there can be a rally back closer to this particular level or slightly lower than that before it starts to rally. But we cannot wait for such a thing to happen, right? So I think probably now it looks as if some support has come here. So the best thing to take the courage is to buy above today's high. Above this high, and keep this low itself as a stop loss. So that's because we cannot keep looking towards an investment buy or even trading buy at this level. So we have to keep here itself, because it looks as if this particular level is holding, because many times when it has come to this particular level, okay, when it has taken support and gone. So today also it has taken support here. So let's buy above this. So that's the trading call that you can take. So go above this high and keep this low itself as a stop loss. So they're very closer to the bottom. Okay. Now we'll look at some stocks. TCS. So weekly chart we'll look at for a better clarity. Okay. So TCS has not even fallen to that extent. So comparatively TCS is looking very good. And so any break above this week particular high should be considered as a very remarkable place to go for a long. So TCS, please keep in mind, because of the relative outperformance that TCS is making right now in the last couple of weeks also. So I think you should look towards going on the long side as far as TCS is concerned. Okay. Now we'll look at the HCL Tech, because that was one stock which fell after the results. So last week also we said it can come and take support closer to this place. So I think we should be looking towards keeping this particular place for as an important stop loss, and we should look towards buying this on any rally above this particular week. So I think the overall situation is even HCL Tech is good for investment, and here also if you see the rally that took place, so will start to take place from here. So we can look towards going long itself. And let's look at the daily chart. Daily chart similar to the TCS. So it has taken support here. So we don't need to wait for the end of this week. So we can even look towards going long. We can even look towards going long above this particular day's low. So today's low is going to be a very important low, which can probably look towards changing the last few days of fall, or if there is going to be a fall below today's low, it can accelerate. So next 2 days we'll give an answer, because tomorrow is an holiday. Tomorrow is an important Fed meeting that is taking place, and decision will be known on Thursday. So let's see what the Thursday reaction in markets is, and then we have a budget on Tuesday. So all these developments can gyrate the market. So at this point of time, to talk about technicals is a very difficult subject, considering these two important developments. But nevertheless, if budget is accepted by the markets, then I think probably we should have seen the bottom of today's as the important bottom. So now we will look at one or two more stocks. Tata Motors. So this is a daily chart, and once it fell below that, now it has started to rally. So the first resistance can come at this place. So anything above this particular 498 is going to be crucial, and if it starts to rally above 498, then in that case we can go long. That's one. Or probably we have to wait and see this particular place, which is 503, 504. So once it starts to break above 503, 504, but that's going to be very steep, right? So we are going to miss a considerable portion from 468 till such time that 503 comes. So we have to take a call based on today's close, and close above this particular thing. So since it has closed above this particular low, I think we should look towards buying, keeping this as a stop loss. So earlier, we had this, and so if there was a fall below this, we could have got out of this. Okay. Now we have got above this place, so we should be looking towards buying now with a close above this particular low. So we should be looking towards a buy with keeping this as a stop loss. So this is how normally you look towards doing a trading based on the pivot point, and we will just look at the for illustration, we look at the this one. There is a Brent crude chart. So Brent crude, so this is a very clustered resistance area, support come resistance area. So this particular area, if it starts to give way, then in that case, we could probably look towards a slightly greater fall. So this particular high, see, this is a place, yeah. So this is 85.33. So on a daily chart, if 85.33 is broken, probably we can look towards going on the short side for some time. So right now WTI crude is still good for an as it is likely to get itself a support which is above the 85.33 mark. So 85.33 keep as a stop loss for WTI crude, equivalent to that in the rupee terms in crude year. Okay, so this is it today, and if you have anything further to ask, kindly ask me now. Okay. So thanks for your participation. Stay safe and happy Republic Day. See you on Friday with a review of the market developments that took place in the last settlement or the settlement till Thursday. Okay, thank you very much.